With the market struggling at highs and the breadth falling off a cliff, the question comes forward as to where do we deploy capital in this market? Now, history would normally tell us to move into the sectors that have the strong relative strength, and we want to be trading momentum leaders. But how do we do that? How do we trade bullish momentum when the bears are in control of the market? To that question, we go to Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, I'm good. It's a bit of tale of two halves, really. It's sort of got, like some of those readings in the last week where 80% of the S&P 500 and the NASDAQ were actually up positive 2 days in a row there last week, where 80% of the constituents were actually down on the day.
So that breadth indicator is just horrendous.
Yeah, so it's almost unheard of. Those stats, you read about the textbooks and they talk about those breadth and those sort of issues, and then they're heavy looking at the end. But the sort of numbers we're getting there, we're breaking some records in terms of breadth records. You know?
How extremely relying on a smaller and smaller number of larger and larger companies.
Yeah, to do all the heavy lifting at the end and making up a greater percentage on the May for. We're seeing a larger percentage of companies breaking down. So it's but we get records are there to be broken. We saw the gold reach something like I think it was like a 55-year-old record there the other day when it got to an RSI level, I think 97 or something, or some on a monthly chart. So it got incredibly overbought readings there. So records are broken, but once you get to, when you are seeing those records and getting those local sort of omens in the market, you definitely you're going to be like there's signs to be cautious there, because you're watching it, and then all of a sudden the market goes bang, and you go, oh yeah, that was going to happen.
I read that in the books before, and these books are sort of decades old. So, you've added in this week's report something a little bit different. You've been, or two things differently actually. There's a lot of questions about the levels and how far back the market goes. But more importantly, you've added some momentum stocks, which I'm keen to look at. So at the end, we'll get into those a bit later. But on the index side of things, a few people are asking, well, what are you talking about these levels and how far back do they go? So you've looked at the monthly this time. So how's that shaping up for you?
Yeah, so it's looking at some of the daily ranges, looking at the last pullback in the market, and then looking at because normally they'll expand maybe sometimes 100% of that range or 200% of that range, or sometimes the 61.8 is sort of is levels in the past where those markets are running hot will expand to. So there's sort of shorter term levels there, but we've been breaking above the 150s and the 161.8s on the short term. So I just thought I'd zoom right out here and actually look at the monthlies. And the best way to look at the monthlies is to go back and look at some of the biggest bear markets there. So the S&P 500, like the GFC, that was where the market had a 50% correction. So that, since then, all the expansions from that level have been sort of key levels. And the NASDAQ, its big decline was the tech wreck, which I think went from like 6,000 down to 1,000. So they had like a 5,000. I think it was sort of 5 down to 1. So it was like a fourth.
With 112 looking at your report down to 1,100. That's torture.
And it's a 4,000 point sort of correction there. So that's the biggest sort of bear market for that index. So if we expand that range is moving forward there, they're often really important levels in the past there. We can kind of see there that market there really hit the major expansions there. So it ended up sort of going to, I think it was around I get sort of retested the old high. I think it expanded sort of above that. And, but what's probably pretty interesting here is that all the pullbacks that occurred from there, like we saw the market expand to the 175 and then back to the 125. So that's basically 50% of the prior bear market. And then the 375 back to the 225, that's sort of 16 down to 10. That was 150% of that prior range as well. So so everything's going to be in geometry of that prior sort of bear market. And we can kind of see here the 175 expansion, the 275, the 375, and the 475 have been really important levels on the market. So we are sort of going up in those 100% increments, but just on a different sort of wavelength there, I guess you might sort of say there. But we've definitely had some strong correlation there at those levels there. So that indicative of the 575. If we were going to follow the sync of this market here, that's suggesting here around 24,200 could be a really important level. If we're looking at the bigger picture, and look, this market's parabolic at the moment, so parabolic markets they can go further than we think there. But we've got all the red lights flashing here at the moment. We're just maybe a little short of where it might be able to get to. So so I know. So sometimes you can have all the signs there for a top, but it can push on a little bit further than you think. But that indicates to me that that's really only about 1.5% away, Chris. It's not particularly far away. That's a big level technically. So the key there is to sort of see how it reacts around those levels and see whether we get some resistance there. We can kind of see in the past, we definitely got some, we sort of stopped at those levels there. And we saw sort of signs of resistance there. And that's when we sort of got meaningful pullbacks there when we did see signs of resistance there. So if we start seeing signs of resistance around that 24,200, that'll be pretty interesting as well, because we've got all the characteristics of there in terms of market structure and market behavior and valuations and everything else. The price action just hasn't wanted to stop going up so far. So, but we know it's a little bit dangerous here to be sort of entering here, really. So, yeah. And the S&P is kind of a little bit similar as well. I sort of, as opposed to squaring at that tech range there, that 0709, that was one of the biggest bear markets, the GFC for this market there. And like every high since then, like the 160, 1.8 and the 200 and the 250 and the 300 and the 400 and the 450, the 600, and they've all been important levels there on the market as well. So they're basically expanding from that previous range. This is sort of, I think, when Gann talk about sort of, squaring a price and time here, I think it was looking at these sort of ranges there. I mean, different guys use different tools there, but I just noticed these sort of expanding those prior ranges there, is kind of meaningful there. It's just, I guess markets move in certain increments over time. So they expand a certain amount. And I know our market has, loves the 50% retracement, loves the 50% expansions. So it's kind of, each index has probably got its own
personality and character.
A little bit of a sort of favorite levels and stuff there. So it's just sort of something to be sort of mindful of there. The XJO is a little, it's funny, we're actually showing a bit of weakness already, Chris. We did go to a margin new high and we did kick down there last week. So that was kind of interesting. We're sort of seeing and we're seeing a lot of stocks actually break down in the Aussie market. A lot of growth names have already had a fairly decent pullback already. So we started to see, I think, JB Hi-Fi and Westfarm was last week. So a couple of heavyweights, sort of leaders that started to break down as well. So we're already seeing lots of stocks within the index actually breaking down here. So, so it's pretty interesting there. I still think they're just, be a little careful about growth there, just where that NASDAQ is and evaluations and just the fact that they are breaking down. I still like the look of some of the defenses. They still look like they're trying to base here. Still think this energy sort of story is going to be sort of longer and stronger, but I think you just got to work your way through the different sectors there. We've seen that it's definitely been rotation in this market from one area to another. So just got to be careful to overstay certain sectors, but yeah.
Okay, so we will look at those momentum leaders, but when we're talking about rotation and where you are seeing that relative strength and possible rotation into, that's something you've been looking at for a little while. The Dow Jones, we're going to assume, is a very similar extension to what you've talked about with the S&P, the US, the Dow, other indices, just a bit of a range sitting at the top part.
I thought that Dow chart's interesting there, Chris, because we showed previously, sometimes we can have those long-serving, particularly downward sort of trending ranges, and then you get the overshoot at the end. And if you overshoot the range, then you come back into the range. That's often sort of the error. Yeah, it is there. So you can get the Dow Jones is just peaking, just popping through the last week here, top end of that range there. So, maybe this might do an overshoot here, which is definitely possible considering the momentum of this market. But breaks back after it does an overshoot, breaks back in the range. That's always a bit of Yeah, that's a bit of like a false break sort of signal. It's usually quite a meaningful signal if you do overshoot and come back in the range. So it's always like a rectangle, which has got a really low probability, but you do get a failure and you come back in. That's quite meaningful. So, yeah, it's just got to be careful of that.
We'll see how that one unfolds. But the ones I'm interested to hear about are things like the healthcare companies that you've talked about building these bases, Helios HLS being the ticker. I'm going to highlight because I love seeing these patterns. It's sort of when it rains, it pours, because I remember you were talking about the 0, 1, 2, 3. We didn't see any for ages. And then suddenly they were everywhere and you were absolutely cleaning up and the market turned. So 0, 1, 2, 3, that's what we're seeing on the chart. Lovely to see that on the chart. And then it's broken out of this, what was it, overhead resistance. Walk us through these recent movements.
Yeah, so I mean, you get that sort of typical exhaustion low. They're pretty heavy volume as well. So see some sign of accumulation take place at the lows, and then obviously retest of that low, and then you start building high lows. So, volume profiles solid, sort of coming in, increased volume on the rallies, pulling back a little bit lighter volume there, and then sort of just building there. So we have just sort of put in that sort of third high low and had a little tight consolidation and starting to break through the top side as well. So kind of constructed price action there, nice sort of basing pattern there. It is a bit of a messy, choppy market out there, no doubt about it. But you are sort of seeing that those longer base patterns there, and seeing those sort of consecutive high lows there. It's just a pretty good sign there, and it's in a sector, Chris. We know that growth does peel off there. Defenses do tend to do quite well. Obviously, healthcare is one of those sectors which has been underperforming here lately, but typically does well if growth does come off.
So it can be a recipient of capital when we do see the markets fall over, pull off, we go defensive, deploy to healthcare.
Yeah.
So Australian Clinical Labs, as the name suggests, in a similar sort of space, possibly defensive. It has been in that downward channel. You were talking about Dow being in an upwards channel. So we've had these sort of touches and then come down. Now it's broken out the one side, but then come back in sort of halfway. Now, I know there's Thomas Bulkowski's written a fair bit about this. How are you interpreting the movement from the false break above to come back in sort of mid-range?
Yeah, he just had an update the other day, which was sort of taken sort of positively. The stocks had a bit of a boost there. That sort of has been a bit of a catalyst recently for a bit of change if we're sort of seeing some sort of good news rolling through there. But we still do have a pretty solid downtrend there. We're just starting to see a little bit of impulsive nature in the run here. What we want to see now is a bit of a corrective pullback, and hopefully maybe we'll establish another base here similar to HLS. We'll get a few high lows as well. So yeah, this is just a sector I'm watching there for for further consolidation there. I kind of want to see it struggle to go down, and then if we start seeing those sort of consecutive high lows, a bit of a basing pattern there, that'll be a good solid sign there. It is generally a lower beta sector, Chris, as well. So that's the negative there for momentum traders there, that we're getting some good sort of setups there, but typically not the momentum
ones.
Yeah, there sort of can be a little clunky, a bit slower there. But look, if most of the market's going to be under pressure and defensives are moving slower, but moving up, it's a sort of place for us to maybe play while everything else is not working. But you're just not going to move that fast. Well, I guess ACLs probably, can move a little faster than the others, the smaller ones, but stuff like Ramsey, the inside can probably move a bit slower.
Well, if anyone wants a whole playlist of what those explosive leaders look like, we'll put a link on screen up there with a lot of Gary's breakdown of those leaders to build out that charting eye and identify the best setups, what they look like in this stage of the market. But Ramsay Healthcare, yes, you're talking about that similar sort of space. FB on the chart telling us it's a false break that you've highlighted. What do you want to see? Because these are looking like tight congestions that you're just talking about on lower volume, but it's right at the lows. So how do you put these together? And then I can see on the chart, you've kind of possibly edged out a target. So what do you want to see to happen to help in the share price to propel it to possibly the target?
Yeah, the volume profile is a little mixed there because definitely saw good volume to last low. And then maybe mediocre volume through there. We definitely saw volume lighten up as we were getting under 40. And then we got a bit of a hit. But then volume profile has sort of grown again. So, but nothing sort of earth generating at the stage. But we're just seeing the price action, as you're quite rightly on out, sort of starting to tighten up here. There is a little bit of a BCP sort of setting up on the daily. So there's two things I want to see there, Chris, on the daily is that one, we have seen that kind of price action and we have just sort of broken above a little tight pattern. The second thing we want to see, which improves our odds of success, is being above the 50-day average. So we know that if we do get that VCP and it's breaks out above the 50, then that's going to give us a success rate a little bit, twice as likely. So
just highlight, it's not the red line on this because that's the weekly chart. It's closer to the blue, isn't it?
Yeah, it's getting close. It is close. It is funny. Sometimes I see these blue waves actually break early, and a break of VCP, but then they might pop a little bit, but then they sort of tend to come back. It's weird. They don't tend to there's been a couple here recently who've broke them earlier, keep going, but most cases they usually tighten up a bit more for a bit longer until that 50-day movie comes down. So sometimes you're better off waiting for that 50-day moving average to be broken, which might mean you come in slightly later, but it'll avoid maybe some of that sort of chop as well. I mean, I think the price action sort of constructive there, but it's but you can get a few weeks of that sort of building phase. But just notice it on the daily there. I think if you wait for that 50-day break and the VCP together, it's just a much
More potent,
much higher probability, So yeah, it doesn't mean it can't work. It just the odds are going to be twice as likely, which is pretty significant. So
massive. And in this kind of market where there's a lot of failures and not many are breaking out and hitting profit target, I'll take every good increase I can get.
Yeah. I've been thinking recently. If I could just wait for those two things, wait for the little BCP or what I call a little B wave break, and I wait for it to be above the 50. If I just wait for both two things to line up there, that's going to be that's probably the edge in this market there. That's probably going to give you enough edge to be profitable and get a good system there. And then it's about positioning and risk management after that. But that's definitely the first ingredient there to have a much, a greater edge in the market anyway. So, yeah.
I like that. Definitely in this market. Now, keeping in that healthcare space, possibly the candidate who receives capital after we're rotating out the breadth, the indices fall down. They don't have to fall hard and fast. They may, but when they do, the capital gets deployed somewhere. It could be Sonic Healthcare, but this chart is just scary. So looking at the weekly, we're about to get to those momentum leaders. This is not it, but this is where that capital can be deployed. So talk us through what's happening here and what you need to see at this end of the chart, because that's quite scary, that move.
Yeah, I've seen big volume down here. So I know there's sort of volume off the high here, but it's been volume all the way through to even off the low and stuff there. So yeah, it looks kind of exhaustive there, but it's still too early here. You really want to sort of see signs of strength there. Like, I think the stock's looking pretty cheap from a valuation perspective, and it's one of the cheaper multiples it's traded on for a long time. So from a perspective, and I think this one looked harshly dealt too. I think really market was looking for like 13% earnings per share growth, and it came in at 9%, and then stock's off at 40%. So it's had a fair whacking on the back of a missed result there. So I'm not sure if it's bad as the market has sort of dealt it here, but the whole sector has been under pressure, no doubt about it. And we've seen here, even though stocks have gotten cheap, a lot of times they've gotten even cheaper. So just because of momentum is sort of pushing it down here. So what we want to see the price action tighten up. They want to see some sort of little B wave break or a little VCP. We kind of want to see those moving averages sort of catch up as well. So sometimes they take a little time to sort of round off there. I noticed that HLS actually that did sort of, the 50 did sort of catch up to it, and then it's built, and then the little move that it had was actually breaking above the 50, and then away it kind of had a bit of a pop after that. So so it's something like Sonic there. I think sometimes just a bit of patience there. I think the price action's tightening up. The 50-day moving average is getting closer and closer here. So that's a good sign there. You just might be a little bit like that res made previously, where you maybe get 2 or 3 sort of high lows and stuff there. So, but we're seeing the signs here that we could be basing there. We just want to see price tighten up, and you just want to see a swing high and break in the, so the professionals will wait for that sort of first sign of show, so first sign of strength there. It's unfortunately in this market, you are getting that break, then you're getting a little bit of a throwback, and then often going here. So, but that's okay. You sort of still want to see that sign of strength first, because I notice in this market here, we're going back to retest the previous high and failing a lot of the time. So if you sort of preempt it, you'll often sort of buy and then it'll fade and then come back again. And then, it seems to be sort of things are happening a lot slower than they were maybe a month ago. Like a month ago, everything was in a race to get somewhere. Whereas now no one's in a race to get anywhere. So it's just a lot sort of slower here. So it's slowed right down. So.
Well, the metrics that we discussed on Friday completely echo that. In the probability of finding a company go up 10% on the ASX fell off a cliff. Right? Anyone wants to watch, go back on the Friday video, but that's really showing up not just in the metrics that we calculate, but in the individual trades. So that tells me, well, I don't have to chase the breakout. I will wait for it to set up, and then I'll look into Wyckoff. I'll understand, analyze the price volume action, just like you walk us through all the time, Gary.
Yeah.
And then get a tighter coil or something else that's maybe a higher probability setup for me. But
this is a great chart actually based on that discussion there, Chris, because it has sort of the whole thing has tightened up here. We do have that little VCP there. We have broken a B wave there, but we are under the 50 moving average. So it means it may just drop around a bit longer here. But so we do have the signs of the base there. We've sort of got a washout low, we've got a first high and low, a second high and low as well. And so we sort of got the basing sort of characteristics as well. Are a positive sector as well. So yeah, it's got the early signs there. We're just probably missing that being above the 50 there. Can sort of see that, can see how meaningful the last year or two has been for that stock. To look at where they've crossed the 50, it's got going and then broke the 50 early in the year and they just kept falling. So it's definitely been pretty important for this stock in particular. So, but yeah, good signs there. We just want to see a bit more consolidation, tighten up here a bit more.
No, that's all right. Definitely. And from our studies, we know once it crosses over this 50-day moving average, 2 to 2.5 times more likely for us to get a good rally out of it. So I can see why you want to monitor these. And as they cross over, if they give you the foundations of a VCP, coil, a B wave breakout, and they're above the 50, I can see why you're really holding for that. Now, on the other side of the 50, you normally want to be trading above the 50-day moving average. And we got one that looks like it's building back up to it. So Propel Funerals, not quite there yet as the leaders, but this is coming off these lows. So these had lows when the market was still pushing higher, and it's sort of not quite V-bottomed, but created this pointy aspect here. How would you trade this for Propel in this market?
Yeah, just noticed it's sort of tightening up here as well. So it's had, look, it is in a bit of a downtrend there longer term, so you just got to respect that. But we have had a good volume profile on this rally here so far. So, and it's kind of been building as well. And then the whole thing started to tighten up here on that trend line. So yeah, just watching this one closely here. But yeah, I'd probably want to sort of see some of the, maybe if we get a tightening again and we sort of, we get a lower top in here, then that would be an ideal scenario. Yeah, come through. But yeah, so it's still getting plenty of setups here, which are kind of failing at the moment. So we got to wait. Don't be in a rush here to try and buy these things there. Really got to be way there, just because I think we're seeing an increase in failed setups as well. So yeah, so our job was just to sort of try and identify these leading type sort of setups, wait for them to price to tighten up, and wait for the confirmation signal as well. Just be careful trying to jump in too early and trying to get early here. You really want to be waiting. That's why I've highlighted a few patterns here in the last few weeks. I think one was Weberjet on the Sonic, Ramsey there. I mean, I'll be waiting 2 weeks, and that most of them still haven't broken a swing high yet. They've just been consolidating, weakening. So, if I jumped in early, I'd be probably underwater here. So on the low lines position. So you really want to be waiting for that sort of shallow strand, waiting to break a little swing high at least. So, yeah,
So that's telling the momentum profile tells me when to chase the breakouts and when not to. And it's telling me, no, don't chase. I'll take the ideal setup, be patient. And to that point, we want to be looking at the momentum leaders. So you've been kind enough to add into this week some momentum companies that you are watching. So can you talk us through what it is that you're looking for with these companies?
Yeah, as you were saying that, Chris, I was just thinking of the great Kenny Rogers song, know when to hold them, know when to follow them. So, it's that's what this market's all about really at the moment. So, you got to wait. You got to be very patient here. Probably more patient than we've been. And we've just been blessed with a pretty fast moving market. Lots of opportunities happening, but they're all drying up here now. So you sort of got it. Can't get less disciplined here. You got to stay. You got to get more disciplined. But in terms of some momentum plays there, just a couple I was watching there was first one was CUV, just because CUV's got a few things happening in 26 there. So got a NASDAQ listing. It's got sort of two trials. Got one sort of trials, which is sort of on top of an existing product, which could sort of open up bigger markets for an existing product. And they've got a new trial coming through as well, which could be a real game changer for CUV. But we're still a little bit of time for that to roll out here. But there's a few catalysts in 26 which could be interesting for the stock here. So I noticed on the weekly there, we've had this descending wedge, which we have broken out. But since then, we've been trying to build. It is a bit of a choppy, messy stock here, but the key there is just to keep building those higher lows, as we often sort of say. So, so again, we're sort of come back down to the bottom of that range. We're sort of, we're key level here now. So this one needs to sort of hold here and actually maybe push through the top end of that range there. But it's definitely a stock that I'm watching there, just because I know 26 got probably 2 or 3 big catalysts for the stock. So, and it's not expensive for one of the few biotechs that actually is well run, managed, profitable for the last 5 years. It's probably just not exciting enough for the biotechs, but that could change in 26. So definitely the market's growing up here. So,
and you start getting big profits, big wins, big addressable markets. That gets people excited quickly.
That's right. Yeah. As we know in biotech sense, so the margins are always pretty healthy. It's just you can grow your markets there. It's can open up there. And then Mesoblast is sort of same here. It's had a bit of a game changing news early in the year, which has caused the sort of stock to have a few pops here. And this stock's had a bit of a checkered past in the fact that it's had to go to market quite a bit. So there's a lot of overhead losers there. But as the stock's having these impulsive rallies, it's sort of now starting to sort of sit where maybe, 60, 70% of the people who've traded in the last 5 years are now in a winning position. So we've still got a few losers above, but the number of losers are getting, fewer and fewer as the stock's sort of been firmer and shaking the market out. And obviously the time passed as well. But just noticed this had a little bit of a three-way pullback there. Just coming back to the old high of the 50, it has broken below the 50 a few times and then recovered there. So it is one of those ones that can sort of cut through it there. I just thought it was kind of a bit of a key level there, just sitting on top of that previous high there in sort of September. I just noticed the volume has been really, really light here as well. So, if I saw a little bit of a meaningful turn here, it'd be worth following it. Maybe it can go back and retest the high. But it is one of those stocks that has had, it's gone from sort of not making any money to suddenly now sort of, got a first FDA product and is doing some big sales there. So potentially, for the stock here, it just means it may not have to raise money ever again. And then having one FDA product, as a larger suite as well, it's got a lot of patents here, Mesoblast. So you finally get one gets approved, can open the floodgates there. So it's been a long time coming here to this stock here, but definitely one to sort of watch here, I think, this year there, just because the landscape there is still pretty positive there.
Very good. Well, these are the type of insights that we love to hear from you, Gary, and you shared with us a whole playlist of what we've got the charting eye to learn. And even for beginning traders all the way through to experienced momentum traders, this is what the best traders do in their downtime. They go back and study the charts. So on the right-hand side, there's a whole playlist where we can learn from Gary studying the best leaders. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.